obviously, you know, it's hard to know if anybody took advantage of, you know, when the markets were higher the end of last week, talking about how this was the potential. But the thing is hopefully everybody didn't panic today. You know, the problem is not acting 2, 3 days ago and acting today at the very bottom, you know, and going to
Yeah.
crisis. And then
Well, people
so
always wait until, you know, they're the ones that are affected, and then you know, it's tough to say. Here's what we had. You know, here's where we kind of opened. Oh shoot! Now my drawing tool isn't working. Okay, well, if I can't get the drawing tool to work, this was Aussie and Japan hours.
hmm
This is where China came in.
right.
People got a little bit scared in the futures when China had some problems. But you can see during Europe they were recovering. And then, of course, here in U.S. hours, as the U.S. markets were waking up, what happened? And I can only attribute this to the fact that even though China scared them, they didn't need to take the market down this much. And so the reason it was taken down this much was margin calls.
Yeah.
These people said, oh my God, I'm going to be in a margin call. And they were just selling. And then once the market opened, people with money still to play
Yeah.
bought, whereas these guys were out of luck because they had a margin call.
Well, let's. You know what? I think. I think we might get a good 24 hours of a bounce tomorrow. We're probably selling a strength, and I'll talk about that here in a moment. But a lot of people did get washed out today. I don't think we're past the lows. By the way, I actually think that we will eventually go lower. But it's not going to be a straight shot, and that's where I need to take a look at some of these charts and point them out. So
Yeah, because we compared this to October, and we didn't quite get to the October Ebola lows,
yeah,
but we came within about 20 handles of it. You
right,
know,
right.
and so and that's interesting that you think it could go lower still, because
I
when
do.
I see a V-type recovery on some of that, I'm more inclined to think that they've found a low. You know,
Well,
that,
I actually do believe we're going to bounce. I think actually we'll bounce today, and I wonder if, you know, I'm wondering if the you know, if the candle's actually going to turn green, if the market's actually turned green today. But remember, this market is, as you know, we've been talking about here, we're in the process of making a rounded top. So I do believe that any rally that you see here, and I know we've been talking about that for the last few weeks, actually since about here. But now any type of bounce, even if this turns green, which I'm assuming this candle, well, let's just say today it does, any bounce that you see over the next day or two is probably going to be end in a failure. And the question is, do we head back and test these lows again? I think we do. I think that we do, but that doesn't mean we're not going to have a tradable bounce right now. And you know, the dollar is actually acting really well now, as it should when the stock market's going higher. And you know, I think there's a lot of big washouts today, especially in the commodity currencies, Steve. Really, really big washouts.
yeah, they are. I would tend to say if you fibbed from about the 2110 area, which is right at the top of that last long red market structure. Yeah, right there.
Yeah, you got to go to actually the
there
peak. Yeah.
to the bottoms, and then take a look at where your 61 and 78 portions are. I don't know that we'll get all the way back down to 1832, but we'll probably use those other two levels at, you know, 1935 and 1896 as bounceable points.
Yeah,
Retest.
you know, I could see that. Today is obviously the lows are in right now, so we can start fibbing from there. And if you noticed, we're actually at the 38% retracement thus far. I mean,
Yeah.
we're already there. I mean, that's been a pretty. Here, I'll just move this out. I'm going to get rid of these that 261% extension. We're already past the 38% retracement, so we may actually come back and retest the breakdown point, which is a 50% retracement, which comes in at 1967. It would turn us green for the day, you know, get people pretty excited. And like I said, I think we'll have enough momentum to get into tomorrow. And then you have to be really careful. I agree with you, Steve. I think these areas around 2000, here, and I'll use it, I'll do it like this, you know, somewhere around here, you know, maybe that previous support right through there. those will this will probably be a big sell zone right through here. I don't think that's
Yeah.
a this is an area where you want to be long and stay long. I think and the question is, Steve, is if we get up to this area and we pull back down, which I think we will. I agree with you on all this. If we get up to this sell zone, which I'm just making in yellow just so we can see where it's at,
Hmm.
and I'll leave it there for the next couple of days. We get up to that sell zone, we pull back. If we fail to hit new lows, then that's when you see like another bullish like candle somewhere. Like for example, we do this, we rally back here, we pull back, and if we don't hit new lows, and we do something like this, then you might have a really nice tradable bounce right over here. But you have
Yes.
to imagine that this sell-off usually comes with consequences. Whenever you have these types of moves, there are consequences behind them. And the consequences in this case is there was a big shakeout, and it's really shattered the confidence of the market and people stepping in to buy now,
Hmm.
which means that now buyers are going to be very reluctant because the rug's been pulled out from underneath them. They're going to be very reluctant to get in on dips, and that's why you have to watch on this. Whenever we peak, and I'm just assuming here, but whenever we come back down, you got to watch if the buyers come back or not, because this is scary. You problem that I see, Steve, and I'm sure you would agree with me. I've told you about a lot of people where I live. They are strictly basically asset managers that put everybody into bullish funds. Anybody like I know several of them around town. They're all dads. They all make 300 grand a year. They all park people's money. They've got anywhere between, most of the guys I know do anywhere between 30 to 100 million dollars in assets under management. They sit at banks, and they literally, these clients walk in, they move money from one bank to another to their bank. They're like, let's put you into some bullish ETFs, blah blah blah. Here's our model, here's our risk, blah. Those guys, they're getting demolished right now, and they're getting pounded, and the attitudes of their clients are really going to start to change, and that's the general public. I live in, the place that I live in you know is a North Scottsdale, which is in Arizona. It's very high end, if you will,
Oh yeah, I
clientele.
remember
So
that part of town. Yeah.
yeah. So these are the types of people that have a lot of money, that have they have a 5,000 square foot vacation home in North Scottsdale, and
Yeah.
they come here in the winter times, and they go back to Minnesota during the summer,
Well,
and
nobody in Minnesota has that much money. Come on.
oh, no, that's not true. It's not true. But you get a lot of people in Chicago, Midwest. They all have their big uh, vacation retirement homes. It's insane. But
Yeah.
that's the type of clientele is in this part of town, and that's why I know them so well. I know what my friends deal with, and I know what the mindset is around here, and and that's it's going to change that mentality. And remember, you're dealing with you're dealing with people that they're the top 1%. They are also the majority shareholders of equities.
Hmm.
You're talking about the top 1 to 3% of society, really.
Yeah.
You,
Yeah.
you know what I mean?
What?
It really is.
Yeah.
They're the higher end people, and a lot of them live in New York. They live in Chicago. They have places out here, and they don't even live in them. It's insane. But that's the mindset you got to really watch, and that's why I'm very interested to see if the buyers come back on another dip down. But it's obviously creating a lot of ruckus. And I only have 20 minutes, Steve, and I wanted to go over some currency stuff with
Yeah.
these
Go
guys.
ahead.
But hey, I thank you for covering for me today. It was been I we lost internet due to somebody hitting our. You saw I posted a picture of our yeah, it's I she's like, oh my god, I'm so sorry. I'm like, yeah,
Were
That's
they
not good.
labeled inside that you knew which one was yours to connect to?
No, no. I actually, my neighbor, he's a big contractor, and his college kids were like that live with him, or I kind of up in a roar. So we were like sticking cords in different holes.
Try this one.
We
Does that
finally
one work?
Yeah, but it's been actually patched together now, so that's good. And now they're just anyway. All right, thanks, Steve.
Sure. Have a good one.
All right, thank you, thank you. All right, guys and gals, this is Blake Morrow. I'm sorry I only got about 20 minutes with you today. I might take you for a few minutes longer than that. We've got a lot of stuff to cover. First of all, take a look at bonds. This is the 10-year, and I sent this out to Wise Trade customers a little bit earlier. The 10-year, the fall in the 10-year, and the shooting star formation that you see here on a 4-hour chart and a daily chart. You'll see it on the 4-hour, or it's actually the daily chart, I'm sorry. Here's the daily chart. We have the shooting star, inverted hammer, whatever you want to look at it, reversal at the 786 retracement, breakout, false breakout. That fall in bonds is leading to a rally in yields, which is also leading to a dollar rally. So if you guys are wondering where this dollar strength is coming from, you're seeing a lot of bonds come off. Volatility, look at the VIX, guys. The VIX was above 50 at one point this morning. That was sheer panic. Hopefully you guys didn't get caught in the sheer panic this morning. I knew when I had one of my best friends, he's like, oh my God, where's the Dow futures? I'm like, they're down 1,000. I'm watching on my phone, and I had to text him, I'm like, it's down 1,000. He's like, I'm like, buy everything this morning. So I text him back, and then his next text was like, Apple's only down $3 now, and that's obviously after the market opened. But this type of volatility, when you got that panic, you've got to sell into. Well, you can obviously sell volatility, but you got to buy into that panic. Again, I'm looking at equities right now. I still think we're bounceable. I think we can go further. The question is, how far are we going to go? And the first key level is going to be where we closed on Friday, which is basically we're getting close to it, but it's really close to this previous support that should act as current resistance. Watch it there. But I want to take your attention to all of these. Let's look at 4-hour charts, and 4-hour charts are pretty important today. This washout, this is real, guys. If you are looking at the Aussie dollar, we traded down to 70 cents and change. We did. You may go, oh my God, we were only down there for a minute, but look at the 5-minute chart. We were down there. Here's a 1-minute chart. You guys want to see it? This is for real, guys. This was a serious shakeout. We traded within 1 minute from 71 cents. We dropped 100 pips. That's a capitulation type of move. You don't want to be on the other side of this now. I mean, on the short side of the dollar yen, or the Aussie dollar. Aussie dollar is probably going to give us a bounce. Now, is it a complete reversal? I don't know if I'm a big believer of that just yet, but I do believe we could bounce right back to 73 cents, maybe a little higher. Now, some of you may not want to trade the dollar. That's fine. Trade this. Look at the Euro Aussie. This is a short, guys. This is like, that's why the Euro's seeing so much weakness. Look at the Euro Aussie. This is a 4-hour chart. That is a shooting star. It's a big one too. I've been on Twitter trying to alert you guys to, through my internet connection, to watch the Euro Peso. You know why you want to watch the Euro Peso? I'll tell you the reason why. This is really one of those chartable and tradable for a lot of you currency pairs that shows you the massive amount of liquidation of the carry trade. You know how everybody's like, oh, it's the Euro CNH, and it's the Euro carry trade. People have been funding the market, long everything, long risk, by selling euro. They sell euro, they buy something else that's higher yielding, like a peso or a ruble or a renminbi, whatever. And when you start to see that reverse intraday, you know it's time where risk is going to start picking up, meaning risk appetite. Okay, so we've had this big fall. I started tweeting about it about 3 hours ago, 4 hours ago, right up here. And we've been falling ever since. Now, as long as this continues to fall, that should support equities. It should support risk. And I think it's going to be a negative for the euro. So keep your eye on the euro, just kind of across the board. Now, speaking of the euro, let's go over to the euro dollar. We were looking at these 4-hour charts. Here's the euro dollar. The euro dollar put it in a reversal on the 4-hour chart. This is a inverted hammer, shooting star, whatever you want to say. It is showing weakness. This euro looks like we are going to come back down to the rising trend line, probably around 1450. So that's only about 60, 70 pips away from where we're at, maybe 80. When we get down there, the question is, will we hold? And for those of you that are looking for a place to go long the euro, that's probably not a bad idea. If you're looking to short the euro and you're like, well, I just want to be on the short side of the euro, you just have to be careful once we get here. If we break through this uptrend line, it's going to get ugly quickly, which would be probably good for risk assets. Just remember, the euro is indicative of risk right now. That means the euro goes down, stocks go up, DAX goes up, S&P goes up for the most part. I mean, I'm not maybe tick for tick, but you know, for the most part, that correlation is pretty strong. If the euro starts to bounce, that's bad for stocks. That's not a good thing for stocks. All right. So and where the rubber meets the road on the euro dollar is going to be down here at 114 and change. I don't know how long. You know, it depends how long it takes us to get down there. It'd be, you know, 114.50, maybe 114.70. Depends how we drift down there. But whenever we get down to this support somewhere, you know, I should probably redraw it or draw it a little bit better. Somewhere down here below 115, that's where the rubber meets the road in the euro dollar. Now, there's other currencies that are obviously being influenced. You've got like the euro pound. I sold my euro pound, the rest of it. I sold half of it last night, the rest of it this morning. Really big. I felt some really big resistance up here. We hit the 38% retracement, or yeah, 38% retracement is why I sold half of it yesterday. Sold the other half this morning on the spike towards 73 cents. Now I want to take a look at some of these other currencies. The pound dollar hasn't really moved at all, but let me show you guys this. This is the pound New Zealand. You guys got to see this. This is real. That is a real spike up there. Now your broker station and my broker station may show a little different as far as the data goes. You know, we might be off by about 10 or 15 pips, but this move up there was real. It was a squeeze. It squeezed me. You know, as we went above 240, but I want you to keep an eye on it because this is showing you the reversal potential, like the Kiwi has, the Aussie has. I don't think you should be chasing the dollar Canadian up here, especially if crude oil starts to bounce. These commodity currencies look like they're going to bounce, guys, and you don't want to be stuck on the wrong side of them if they do. So this move completely cleared out a lot of people, but also keep in mind and remember, this is how real it was. Here's a 1-minute chart. That was real. As jacked up as it is, that was real. All right, those are like capitulation type of moves, and I don't use that term lightly. You guys know I very, very rarely use those types of terms. But the Kiwi dollar really flushed out a lot of people today. The Aussie did too. And you guys know that we're near some really key levels on both the Kiwi and the Aussie. And this could set up some reversals in the pound New Zealand, euro New Zealand. I got asked, hey Blake, you know, should I be, you know, shorting the Kiwi and the Aussie up here? I'm like, I don't think I'd play them to the short side. If you want to short something, you know, and you want to play the dollar long, short the euro, short the cable, buy the Swissy, buy the yen, but not these commodity currencies. These commodity currencies look like they could wickedly bounce. Now let's go over to the New Zealand dollar just so I can give you guys a bigger picture view. Let's go over to the weekly chart. Check this out. Okay, here's the New Zealand dollar. Let's go to the monthly chart. I'll just screw that. Okay, here's the 618. Look at the flush. Look at the flush below 64 cents. See that flush? That was real. That was real. You know, so the question is, you know, will we, wow, the euro just popped right back up again. I don't know why the euro just popped up, but it did. Looks like maybe an order just came through for the euro. we were down in the 20s and we just spiked up to the 50s. Oh, wait, hold on. White House Treasury closely monitoring markets. Oh, well, that might be it. Okay, here's the euro. It's coming back down again, but sorry, I'm trying to grab a drink while I'm speaking at the same time. So obviously the markets are, it's really really volatile out there, guys and gals. So just be really careful, obviously. Um, but look at the Kiwi. I mean, we came down, we went through the 618, we pushed through those lows, we bounced right back up again. And the question is, did we really just flush out a lot of people? And I think the Kiwi did, the Aussie did too. And let's go. What else? Oh, the dollar yen. Here's the dollar yen. Looking. You know, we hit 161% extension of these ranges that we were in. We hit 100. We overshot the 161% extension. 261% extensions there. The whole summer we surpassed the 161% extension and bounced. I mean, these are some big moves, and like I said, you got to be really careful being on the other side of them. Yeah, and look at this horizontal support. Here's some horizontal support on the dollar yen that comes in just around the 116. I mean, there's a lot of support down here. So be careful if you're shorting the dollar. Dollar Swiss, I'm still long the dollar Swiss. There was a lot of panic in the Swissy overnight, but you'll notice that like currencies like the Euro Swiss actually look pretty good. The pound Swiss is firmed up pretty nice. So we maybe overshot this downtrend line and hit the 786 retracement of the lows post, Swiss National Bank. There, this is all the move. We hit that base low to the high 786 and bounced pretty aggressively. So be careful here, guys. It's really tricky, very volatile, and obviously moving really really fast. And I'm going to caution you not to chase a lot of these moves right now. But I think what you probably want to keep an eye on is some of these commodity currencies look like they're about ready to stage, some pretty wicked bounces, and that could, obviously that helps risk appetite when you see commodities bounce. Let me see if I can take a couple of questions. I don't have a whole lot of time, obviously, and my throat's already dry from talking so much. But what a day, you guys! What a day. Let's see here. And isn't it nice that we had that little conversation on Thursday and Friday about, the risk in the stock market? Hopefully you guys took advantage of that. I hope some of you guys actually bought some protection and have fared okay. It's days like today I really worry about. I worry about the traders, you guys that listen in here every day. I worry about you because I'm concerned that, days like this wash people out, it really does. Okay, let me see if I can take a couple of these comments. Randall says, who's that familiar voice? Hey. Rick says, on the euro dollar, the channel on the weekly from May, it broke up. Don't you think possible to go measure moved about 119? Of course, equities will be under pressure as well if that happens, I would guess. And yeah, that would probably be it, Rick. And matter of fact, you can see the markets are already starting to roll over a little bit here. Let's go over to the euro US dollar. Okay. Here's the euro US dollar, and let's take a real quick look here. And I kind of deleted everything this morning when I finally got my internet up and running, just because I wanted to see where everything was at and get a clean view of everything. So here's the euro. Copy paste. This channel. Yeah, actually, let's do this. I might have to tweet that because that's a really important chart from what I gather. Um, Hold on, let me check something else here too. Yeah, the that is actually a pretty important chart. Whoops, I didn't want to do that. Remove that. No, no, no. Trying to remove the fib. Shoot. All right, guys, let me just delete the fib here. All right, forget it. Okay, there we go. All right, so 618 takes us up to 120. Yeah, I'd be really careful trying to chase the euro up here. Um, Give me a second, guys. Give me a second. I'm gonna tweet this. Roughly what I am seeing the euro US dollar at the moment. Okay. Yeah. So yeah, you obviously have to be a little careful with the euro, especially if the euro dips back below like 115. We dip back below 115, and that, then we got a false breakout on the daily chart. This is the um, you know part where you got to be really, really careful. I think it's fine if you're on the long side, if you're buying dips down to 115. If it breaks below 115, gets much below there, you probably want to be very careful being on the long side of the euro. Gene says, sorry, Blake, thought you went on vacation, tweeted you regarding vacation theory. No, just busted cable box. Alex says, hey, Blake, you're so glad you're back online. Will the US dollar strengthen? Can you look in the US dollar, Swedish krona, and Norwegian krona upside right? I don't know. I haven't looked at them all day long, but let's take a real quick view. So here's the US dollar, Norwegian krona. I mean, very limited dip. Here's the daily chart. I mean, it's actually green on the day. Very limited dip for what we've seen. For all the strength that you've seen in the euro dollar. It's surprising that the US dollar, Norwegian krona hasn't fallen more. So we're holding support. The problem is we broke this, uptrend line. Let's go over to the Swedish krona. Here's the Swedish krona. We finished the flag pattern, which, hey, look at that. We finished the flag pattern and bounced. And we also hit a 786 retracement. So recovery from these levels in the US dollar, Swedish krona, I think that's entirely possible at this point in time. Now, you obviously have to be careful with the euro dollar. Just make sure the euro continues to pare back some of these gains, and if that's the case, then that might play out pretty well to the upside after we hit that flag pattern completion. Which like I said, I hadn't looked at it all day. There's a lot of things I just haven't had a chance to look at it. Here's the Mexican peso. Obviously, the peso is overshot. This has crushed a lot of people. I mean, people have been trying to fade this. Famous people, too, which is, well, to each his own, I guess. I say famous, but you know what I'm saying. All right, and there's the dollar yen. Let's go over to, we looked at the Swissy. Swissy's trying to build here. The dollar yen is holding above 119. That's good. Let's go over to the dollar Canadian. The dollar Canadian, I really don't know what to do with the dollar Canadian right now, but I'd be careful with it. Like I said, if these commodity currencies start to bounce, then we might actually see a bit of a bounce in some of those. So just keep your eye on the commodity currencies in general, like the Aussie and the Kiwi, to get a better gauge of what the Canadians do, and obviously crude oil too, especially if crude, gets back above 40, then that's gonna be bearish for the dollar Canadian. All right. Rob says pound New Zealand daily range is 2,351 pips. Is it really? Pound New Zealand. Let me see what I've got. I've got in the pound New Zealand. I'm going to put gold back up. Day ATR, I have 3,000, or excuse me, the day range, 2,100 pips day range. That's what I got. But like I said, your broker's platform, my broker's platform, I should be showing something just a little bit, just a wee bit different because of how far things went. Stefano says the 6S or the Swiss 4-hour has a nasty reversal too. Yeah, they do. All of these 4-hour charts have big reversals, and they've just pulled back a little bit, which might be a great opportunity for those of you that are looking for some trades. Like, yeah, here's a nice 4-hour reversal in the 6S, which is the Swiss franc. Yeah, I think you got to start looking at some of these dollar pairs as possibly getting long. Okay, let's see. Elaine says, can't fool me. Sent the men in black to take out Morrow's connection so the market can misbehave. It's a conspiracy. Laugh out loud. Yeah, somebody asked, she was like, is that lady long the DAX or something like that? Somebody asked me that, and I'm like, haha, that was funny. Daryl said, hey, Blake, what do you think about buying a little Aussie New Zealand here? I think the Aussie New Zealand has come back. I haven't looked at it much today because I've been focused obviously on all these dollar pairs. But we completed basically the double top. I mean, this is for the most part complete. I mean, I may have misdrawn this a hair, so I mean, for the most part, we've completed the double top. So I think it's probably not a bad idea. Maybe that's crazy. I didn't even see that. Maybe buy it on dips back to 110 for a rally. Probably not a bad idea. These are good places to. These, in my opinion, are good places to trade. Are good currencies to trade to kind of stay away from the volatility that we're seeing all over the place. I think you're getting in a better opportunity to trade some of these cross rates right now. Alex says, why hasn't the U.S. dollar appreciated more in this period of risk aversion? I think a lot of it, Alex, has to do with the carry trade. The carry trade unwind, and the euro being the primary funding currency through this whole thing, and that's why the euro crosses like the euro peso has just been rallying the euro against a lot of things. Even the euro pound has been rallying. So I think you got to get that liquidation of those carry trades out of the way first, and then once you do that, the dollar will probably take hold as the more of a risk aversion type of currency. I think I'd have to imagine after a day like today, the market has rebalanced itself quite a bit, which, like I said, it may allow for the dollar to start trading a little bit more like a safe haven currency versus a non funding carry trade funding currency. Let's see. Stephen asks how the yen pairs like the Canadian yen. I haven't really messed with the yen pairs. All I've been watching is the dollar yen as it got back above 119. I've been watching it very carefully, just because that's also given the dollar a lot of a boost, I believe. But here's the Canadian yen. I mean, wow, that thing got absolutely crushed, didn't it? We hit today that upsloping trend line. That's probably like the New Zealand yen did a head and shoulder completion today in this all this mayhem. So Yeah, crazy, crazy stuff, Stephen. Um, let's see, just a couple. Let me see if I can grab a couple of just other quick comments. Um, Falzan says weekly trend line resistance rejected on that U.S. dollar move. Was long the pair for the last 3 weeks and booked all of it earlier. Blake, thank you. Oh, very nice, very nice. Let's take a look at the euro U.S. dollar weekly trend line. Let's do it this way. I guess what you must be looking at. I'm just making an assumption here without actually looking. You basically played it right up to that trend line, which makes sense. I wouldn't be surprised to see the dollar yen, or excuse me, the dollar yen, the euro dollar give back some of these, um, give back some of these recent gains. Especially a lot on the crosses. Um, Steven said stocks look like they're rolling over. They probably are going to pull back a little bit. Let's go over to the E-mini futures and see how far of a pullback we can get. And remember, it's been a hell of a bounce. I mean, this has been a crazy bounce this morning. And this, let me just move this over so we can actually see it right there. Okay. So now let's imagine that we get a bit of a pullback from here. You got to imagine there will be. So, let the S&P, maybe drop another 20 points or so, and that might be a place to get long some S&P for those of you that looking to trade to the long side, looking for maybe a late afternoon recovery, might come down like that and then bounce. Okay, it's entirely possible. All right, guys and gals. Hey, I just want to let you know. I'm glad I got to catch you up on a few things. It's very crazy out there. Keep your position size small. Be nimble. Be very careful out there. I hope. I wish you all the best. I should be. I'm 90% sure that I'll be up and running tomorrow morning at 7 a.m. Eastern for the morning edge. My only problem is if they come and they're going to cut the main cable and reattach it because it's been bent and it's affecting all the people down the street. So they're going to be doing that hopefully sometime around the midnight hour when I'm sleeping. But I should be back tomorrow morning at 7 a.m. Eastern. Thank you all for being here, and it's big thanks for Steve Bealby. Steve has been, and Paul Franco, who covered this morning. Those guys have been a godsend today with my internet out. So we'll be back at 2:30 p.m. Eastern with Steve Bealby, and I need to go to the bathroom now. So thanks everybody for being here. I'll see you guys. I'll see you guys tomorrow morning or in the chat rooms.